Hello everybody, Jackson here with the Wealth Squad. Today we'll be talking about buying this dip. So if you haven't been following stocks lately, then you would not know that we are heading back down. So we could view this just by checking out. Honestly, this would work. You can see right here in early March, the market hit a low. And then when April started, we went back up. And now we're back down again. Uh, you can see this in other stocks as well. You can see this in Facebook. We hit a low early March, and in April we hit, the range high, and now we're heading back down. You can see this very explicitly in PayPal as well. It's a great representation of what we've been going through in the growth stock market. So, what we are looking at is the best stocks to buy this dip. So what we need is a criteria search or a screener. We're looking at finviz.com/screener, and I chose oversold at under 40 RSI, and this is on the yearly time frame, and the country USA. If I choose under 30, my top stock goes from Netflix goes from 100 billion company down to a $9 billion company, and that doesn't show what we want to see. So we gotta do oversold, but under 40, and we get, now we have 15 companies that are above, or 10 above the $100 billion mark, which we'd like to see. So let's start off by getting some more criteria in here. We got oversold under 40, RSI on the yearly time frame, and country USA. Let's get market. No, we don't have to deal with market. Let's do forward PE under 25. So that cut our criteria from 1,500 selections down to 250. We could do EPS growth past 5 years, positive. So now we took out another 100. We could do EPS growth next 5 years, positive, right? Obviously, we want something positive. Now we're at 113. EPS growth past 5 years, also positive. 84. And you can see each criteria we insert, and this is just the bare minimum, right? You should obviously grow your earnings in 5 years. And next 5 years should be at least forecast to be positive. Sales in the past 5 years has to be positive. We could do PEG under 3, which is very reasonable. Most stocks that you buy should be under 2, but under 3, let's see how much we could get down. 66. 52-week high or low. Let's do 30% or more below high. 66 down to 41, and this just gives us a better discount, right, of what we're actually buying. You can see Netflix is still in here, so Netflix is passing all these, as well as Facebook, AMD, PayPal, Starbucks, Warner Bros, Skyworks Solutions, Etsy. Let's get 2 or so more in here. Obviously, we want a positive net margin. Not obviously, actually, a lot of companies aren't generating profits. They're just a growth, soon to be generating profits. But for this, I think it'd be safer if we chose something that is profitable. So it only took off 1 anyways, because we have EPS growth, and that has to do directly with profits. And then let's deal with their cash. So under 1, let's see, that's too good. Over 1, 28. So what you want is something over 1. Under 1 is not healthy. Over 1 is. That just gives us a better glance at their cash positions. So I think this could work out. We're looking at top 28 companies that fit all this criteria. We're basically looking at, top 8 or so. We don't want to deal with anything too small. So let's go from here. Actually, we could do this. Basic. Perfect. We get our own view. All right, so looking at Facebook, 52-week low around 185, and trading at a forward P of 13.8, which is crazy for a stock this size. We are getting it at a large discount. Let's check the technical analysis. We're getting at a 48% discount, above 8% of the 52-week low of 185 or so. Definitely trading at a discount. That's kind of an understatement. With a PE ratio of 13, definitely looking at Facebook, crazy cheap at this price. Down 7, nearly 8% today, just based off news not directly tied. It's based off Netflix, right? Because Netflix had a terrible day. And generally, when a stock that big falls that much, it hurts a lot of stocks in the similar arrangement of industries. So AMD is next. You can see we're getting AMD at a 43% discount. AMD also passes all these earnings growth indications. Year to date down 35%. I haven't been looking into AMD very much. 4P of 20, so it is getting more reasonable. You can see a P36, 4P of 20, so the earnings are going up. You can see earnings next year up 15%, past 5 years 44, next 5 years 29.9 on average. So next, PayPal. One that's very cheap. You can see it once 300, now under 100. Has a PE 4P of 16, PEG of 1.5. Obviously above 1 is what you want. And we're getting it at a 70% discount compared to previous prices. Netflix, of course, down 60, nearly 68% from the 52-week high, created a new 52-week low today. Obviously fell 35% based on bad earnings. They lost subscribers for the first time in a decade. You're going to have some bad earnings if your most basic customer service is losing customers. So that makes sense. Netflix might not be, it could just be the start to the end. Who knows for Netflix? I'm sure there's some room left for Netflix to go up as well as down. So it's not the most safest bet you can make on here. Warner Bros. Discovery, Skyworks Solutions. As long as we covered these four, I'm pretty happy. But what we have to note is in terms of oversold, undersold, as well as the MACD. So what we need is trading view for this. Let's check Facebook. So we are seeing here MACD is turning over, starting a new red shift. You can see basically it's right here where it starts anew, goes down for a couple days, then starts slowing down and turns green. You know, obviously the price doesn't reflect that all the time, so you can see right here. But generally, when the blue line crosses above the orange, that's a good time to buy. When the blue line crosses below the orange, that's a good time to sell. Right now, the blue line is crossing below the orange. Maybe not the best time to start buying it. Just start watching it. In terms of the RSI, we are in that lower range under 40. Not entirely oversold yet. Not yet. Let's check AMD. AMD blue line about to cross above the orange. That's a good sign. And the RSI in that lower range, but like Facebook, not below 30. And then we got PayPal. Blue line crossed under the orange, not a good sign. And the RSI is headed towards that 30. Not there yet, but what I would recommend for these stocks is to start buying in if you are wanting to get in eventually, because prices this low can't last forever. And Netflix, of course, under that 30 RSI, and just past below that orange line on the MACD. But let's check out Facebook. This could be our main stock we're looking at tonight. Besides getting at one of the cheapest prices since COVID, right? Since a month or two after COVID, you have to consider all the earnings reports in between. of them making money every single time. You can see earnings, $3.61 profit, 322, 367, even though they were supposed to make 384, 330, 388, 271, 180, 170, 256. So they've gone from 250s to high $1 EPS to now 3, and that's consistent. We have an earnings report coming up on the 27th, which is in a week from now. So next Wednesday will be Facebook's earnings report. That'll be exciting to look at. If more volatility comes along, then we could be happy that we could get at cheaper prices. So maybe way off on Facebook for now. Not totally not totally oversold on the looks of it. So we will have to wait. But in terms of starting to buy now, Facebook could jump 20% when it comes to earnings. We don't know. That's why I'd recommend getting in now, at least a little bit, to any of these stocks that you've seen today, and then go from there. If it goes down more, buy some more. If it goes up, move on to the next. That's an easy way I like to look at it. So I hope this video helps you get in the right mindset for what we're attacking, what we're dealing with. It's not everything. It's not what you see every day for sure. Stocks these cheap don't tend to stay for long, so I'd recommend getting in not early, but definitely not late. So let me know what you think of the video. I'd love to hear your comments down in the comments section, and thanks for watching.